Welcome back. Well, Vunani is gaining ground in the domestic asset management space following improved half-year results and a merger with Sentio Capital. The group is building momentum as it pursues further growth and consolidation opportunities. And joining us now is the company's CEO, Ethan Dube, to unpack the strategy behind this expansion drive. Thank you so much for your time, Ethan. Now, just from a bird's eye view in terms of what is impacting the broader financial services space and particularly Vunani, across the board, when I looked at your results, you did get a boost from the increased activity and strength of the financial markets. And of course, there's lower inflation and the response of the central banks to that. So just talk to me about the specifics in which that has filtered through to the company.
Yeah, thanks very much for having me and good afternoon. I think we are pleased with these results, and I think we've seen an improvement across all the areas of our business, as you rightly say, largely driven by the reduction in the interest rates and also the improvement in the equity market, specifically in the South African market. So we saw quite, an improvement in our results, which we're very pleased with, and really driven by those factors that I've mentioned.
Mm-hmm. And something else that's been, making headlines when it comes to Vunani is that merger with Sentio Capital. Now, the entity manages over 60 billion rands. How quickly do you expect that scale to translate into improved profitability?
Thanks very much for that. We did two deals during the period. One deal that we did was we sold 30% of our asset beneficiary fund administration business to Old Mutual. And really, the reason for that is that we could then collaborate with Old Mutual, particularly on the beneficiary funds administration. That's gone very well for us, and it seems to be proving what we thought it would derive. The second transaction that we did was really on the asset management side. We've always advocated that businesses of our size, there is need for consolidation. The deal that we've done with Sentio, there are no overlaps, but that takes us from about 42 billion rand mark to about 62 billion as of now. Once you get to those levels, then you're of size, and the chances of you getting to 100 billion and above gets just increased, and that's why we're doing the deal. So we're looking for opportunities both in terms of organic growth as well as possibly in the consolidation space.
Ethan, would you say that there is a structural shift within the asset management space? I mean, just also looking at the shrinking savings pool in South Africa, and do you think that then that necessitates this kind of consolidation wave that it seems that we are in South Africa?
Absolutely. I think there's one other issue that pushes that, which is really the squeeze on the margin side. I think that everyone is feeling the margin squeeze. So you've got margin squeeze, and then you've got also quite a lot of the assets being managed offshore. So as I say, if you are small, you are definitely going to struggle. So I think the consolidation is something that we're going to continue to see. For us, we think that we can play that quite well, and we are well positioned to basically drive that agenda going forward.
And talking structural shifts, then, Ethan, many asset managers on the global side are pivoting toward private markets as well as infrastructure assets to drive returns. Do you see Vunani following this trend as part of its growth strategy? We're talking consolidation here, and I know the group is also pursuing even further acquisitions that I guess will also create a more diversified entity.
Absolutely. I think we are basically following that strategy as well.
And just on that, you talk about the transaction that you did offloading one asset to Old Mutual and also gunning for more acquisitions. How much room do you still have for that kind of asset management?
Let me get back to the deal that we did with Old Mutual. We only
Okay.
sold 30%, and I think the idea for that is that we could, between ourselves and Old Mutual, we can grow the business in the beneficiary administration space quite aggressively, as it's proven. So we basically, Old Mutual will pick up assets, and then we do the administration on the beneficiary side. On the asset management side, we think that, as I say, it's a scale game.
Okay.
If you're small, you're not going to be able to grow. As I always say, it's harder to get to 20 billion if you're managing 5.
Yeah.
But if you're managing 60 and 100, it becomes much easier to get to 150 or to 200. So the reason why we felt that it was necessary for us to basically do this deal, other than the fact that we felt that there were no overlaps, and it's a deal that really fits in very well with us, and in terms of like consolidation, it make a lot of sense for us to do that deal first, and then we are actually out there looking to see whether there are other deals that we can do. Obviously, we have to continue growing organically, but I think just organically is going to be difficult for a lot
Yeah.
of people.
And deal making aside, Ethan, I want us to zoom in on the significance of the SADC region in your broader growth strategy. You can walk us through the shifts you've been seeing in both Botswana and Eswatini. It's also been interesting to see that pivot to the retail investor in Botswana. Why is that taking place?
Our strategy has always been focused in the South African market, but also in the region. As you would have seen, as you rightly say, we now in Botswana, we in Eswatini, we looking in Namibia. We already set up an asset management in Lesotho. So we see those as growth markets for us. In Botswana, if you look at our results, we kind of like got a reduction in assets under management, largely coming from the institutional funds, but we are focusing that business or shifting that business mainly into the retail space. It has the platforms, and we are going to try and push that business towards gaining assets mainly on the retail space. Retail space is quite nice because the margins are also quite better than the institutional side of things.
Right. Well, we do have to wrap up the conversation there, Ethan, but thank you so much for giving us some more insight on that landscape. That was Ethan Dube, CEO of Vunani.